Hey there, traders, checking into the stock market today. Bulls start the week on a very strong note. Lots of proof out there from the bulls. Bears were nowhere in sight. There are a couple setups that have our eye for the bears to potentially take over, but unless they prove it, we're looking bullish. The burden of proof is on the bears. So we got SPY confirming the daily trend change on Friday, seeing some healthy consolidation and getting followed through today. The all-time high is about 0.6% away or so. And that's the level we're looking at. Even if we fail initially, anything above 405.33 is a daily high or low. Weekly inside bar bull break giving us our weekly high or low now at 404, and the EMA 12 still holding. So again, the burden of proof is on the bears. Take out 404, otherwise the bulls keep their complete control. IWM, still daily range bound. Anything under 223.24 is just a daily lower high. If the low of today at 220 breaks tomorrow, the daily equilibrium will continue playing out. And we'll be viewing it like that. And we'll be scouting a higher low compared to 214.05 if we do see some short-term bearish action. Bigger picture, the weekly chart is leveling out a little bit here. And we do have to be cautious. This is one of the names where bulls do need to be cautious of potential monthly consolidation. We are not as comfortable as QQQ or SPY unless we see a clear break of 223.24 to confirm the daily trend change. QQQ, follow through. So it looked on Friday, there was definitely a, okay, we need to be cautious kind of setup. And it was a bit ambiguous because you confirm the daily trend change, but you're extended when you do it. So you consolidate and close week on Friday. Honestly, the futures chart did a lot for me for staying on Team Bull as far as the consolidation. Because we ended Friday with profit taking all day and then an hourly bear flag into the close. But if you look at the futures chart and zoom out to the 4-hour time frame, absolutely no red flags. We were overextended, healthy consolidation to establish a higher low, and there's our continuation from here. So QQQ, next resistance is up at 336.65. And anything above 316.30 is a daily higher low next time we consolidate. A scenario for the bears that we need to be cautious of would be a head and shoulders, which would mean an inability to break the all-time high and then confirming a weekly downtrend by breaking 316. Again, there's no sign of it. We will see it coming with notable bear volume if that's going to be a possibility. But we can't just get, we can be bullish, but we don't want to just be blindly bullish. We want to say, okay, I'm bullish, but these things happening would make me shift my stance. Financial sector, still range bound. Daily equilibrium playing out. 38.5, 38.05 is resistance. If we have to lose the hourly uptrend for a daily lower high to be set. So the bears would need to break 37.55 for a convincing daily lower high. They're holding on strong. As long as the daily uptrend remains intact, the financial sector bulls hold on strong. With my hedge position, right now I am only in FAZ, so my only bearish exposure is XLF, and out of the last 3 days, 2 out of the 3 days, that was the right decision where QQQ went up significantly more than XLF. It wasn't the case Friday, but it was the case Thursday and today. So I'm going to keep that position until we get a convincing new all-time high. And again, that's just to protect because my swing positions are only all bullish otherwise. SPY, GLD, SLV, ARKK. I think that's it. Healthcare. It's a daily rising wedge. So again, here's another bear scenario that we need to pay attention to. Anything above 121.59 is a daily higher low. We will have to lose the daily higher lows if we're going to see this pattern confirm. And we'll have to confirm on increasing bear volume. So again, the setup's there. Prove it, bears. Prove it to us, and we'll pay attention. If you don't prove it, we're not going to pay attention. Daily inside bar today, week close. Bulls looking for a daily higher low compared to 121.59. Biotech sector, range bound the last 5 days. Top of the bounce, higher low of 123.83, lower high, and the bulls are trying to hold 123.83. If that level breaks, weekly bear flag is on the table. Again, we're watching this rotation into growth narrative, and we're watching for it to continue if the S&P 500 remains strong. And we saw some really big bull moves in electric vehicle names today. Tesla, NIO, ARKK had a good day, but XBI and solar, not so much. So it wasn't just everything growth going up. There were some names that stood out stronger, some names that stood out weaker, but XBI has a lot of proving to do on this weekly time frame. And again, it's the flip side. I'm watching for the bulls, but they have to prove it. And this weekly bounce at this point is not proving it as far as follow through and confidence in a monthly higher low. Look at NIOs. No, look at, who am I thinking of? Somebody's got a monthly candle out there that looks really good for a bullish reversal candle in the growth sector. But I forget who. So XBI, all about 123.83 short-term support. SMH, doing the same thing as QQQ, but a magnified, more bullish version. And NVDA has just been on steroids the past few days. 2 gap ups plus a gap up right at the high. And just like that, we've gone almost 20% in 4 days from that gap down open. 16%. All-time high back in play. Weekly higher low is set. And SMH is a weekly equilibrium. We are scouting a lower high compared to 257.54. All-time high, low, lower high, higher low with the inside bar bull break. And if we were to form an equilibrium and break it bear, that's a bear scenario to be watching for. But again, bears have to prove it. And plenty of space for a daily higher low, anything above 223.94. Tan. So there's the weekday, not too weak. We held the low of Friday, but not green like many other names. So if we break that double bottom at 77.42, we look for a daily higher low compared to 70.12. And again, all these names need weekly bounce follow through to create the space for a weekly trend change to eventually try and take place. And at this point, these are not convincing bounces. We have to remain skeptical of the bulls who have the burden of proof on them. Yes, it's been a great bounce the last 2 weeks, but more is needed. If we're talking long-term shifts, if we're talking monthly higher lows, more is needed. MSOS, range bound, nothing going on. Low, high, higher low. Anything under 4107 is just a lower high, but I am watching Canadian MJ names. I like these real tight daily charts on TLRY and CGC. Bulls aren't proving anything, but I'm watching for a scenario. The MJ sector is a growth sector. It is the weakest of the growth sectors. If we continue to see broader market strength and money flow into our growth names for monthly higher lows, I'm watching for the MJ sector to be a laggard growth sector. So I'm keeping a close eye on TLRY. Had a dumb trade on TLRY today. We'll go over that in just a second. But if these bulls can turn around and break 1556 and 1587, it'll be a shift in momentum for a weekly bounce to be underway. And it's just something I'm keeping an eye on. When this sector gets this tight, it is very responsive to headlines. Keep an eye out for a headline. Dumb trade. Wanted a swing position for that. Everything I just said. Bulls started the morning strong. And V-shaped bounce from the low of the day to a new high of the day. Liked the way the daily chart was shaping up for the potential of a trend change here. And I entered a smaller swing-sized position at about 1538. Not giving the bulls a chance to break the daily inside bar bullish. And they double topped. Rejected to the penny. And then the bears really proved it with just a collapse. So that collapse was very notable. And I stopped out on the new low of the day, 1495. And it was just me being lazy in terms of saying, well, it's a small position. I'm just going to enter now and let it play out. So that's on me. Mistake for sure. But that being said, it was a daily inside bar bear break with a lack of follow through. So I'm watching and wondering, was that a little last flush out before we shift momentum? Canada was closed today, which has an impact on the MJ sector as they are dual listed. Very curious to see if the bulls show up tomorrow. The VIX equilibrium broke bear. Daily downtrend confirmed, 1670 next level. Next time we bounce, anything under 26 is just a daily lower high. So with that, weekly inside bar bear break, no bull follow through, in volatility as fear is being alleviated. The dollar, 4-hour falling wedge on watch. Low, high, lower low with a lack of follow through, lower high. Burden of proof is on the bulls. Get over 90.16 and I'll start paying attention to the bulls. If they don't, the bears keep complete control. So just something to pay attention to because gold is in a 4-hour rising wedge. And if the dollar breaks bull, I'll be watching for gold to potentially break bear, and I will exit some of my metal swing positions if the dollar breaks that 4-hour range bullish. Gold has plenty of space to maintain the daily uptrend. Little higher low of 1852. Silver pulled back more significantly. Anything under 28.75 is a daily lower high on silver and a potential head and shoulders setup. So just a little bit cautious for the potential of weekly consolidation to begin in the metals, but it's likely not going to happen without the dollar breaking bull. Sideways inside bars on the miners, trying to confirm a daily bull flag. If not, we'll still look for a daily higher low, but the bull flag will be negated. But really no information the last 3 days, just sideways. Bulls are pleased they're holding the gains, but no new information. Oil. So oil, I had drawn the broadening wedge last week, and I had drawn it like this. And that's the thing about trend lines. You can always adjust them. Because now that I see this kind of bullish response, V-shaped recovery, to me, it makes more sense that this is still a valid broadening wedge and that it should look like this. Still getting all the touches. And to see that kind of a bounce after a bear break tells me we're still in a broadening wedge. Because again, remember, broadening wedges form bear breaks with no follow through, then bull breaks with no follow through. So we had bear break, bull break, bear break, bull break, bear break. Do we get the bull break? Bears are watching for a potential top fish as we will be very extended if that level gets tested tomorrow. But ensure you leave wiggle room if you are trying for a bearish entry because we see higher highs before those tops are hit in a broadening wedge formation. So going to keep an eye on this as it continues to play out. Natural gas pulling back notably on the daily. 4-hour trend change back to the bulls needed. If we get it, we zoom out and scout a daily lower high. Weekly equilibrium potentially shaping up. High, low, lower high. We'll be watching for a weekly higher low compared to 243. We just went up 6 weeks in a row with no real weekly consolidation. So if bears follow through with confirming a daily downtrend the next time we bounce, then weekly equilibrium is the most clear. So other than that, not a whole lot going on. I didn't really trade much today aside from that TLRY trade, which was a loser. But my account has looked like this. And then the last 6 days, it's doing this. Why? Because I'm fully focused on cryptocurrency. Traded it for 12 hours yesterday. Profit opportunity is way more significant in the current volatility in the cryptocurrency space the last 6 days than it is in the stock market. So one thing that I have as an edge as a trader is going where the opportunity is. And, if you look at my stock account in 2017, I didn't do anything because I was fully crypto. And the last 6 days, it's essentially the same thing on a much smaller time scale. So just as an example, this month cryptocurrency gains are probably 35-40% of the entire year's stock gains. So that's worthwhile. And just as an example, yesterday in 12 hours of crypto trading, I made 80% of May stock profit. So I'll continue to trade it as long as the volatility is there and continue to not kill myself by trying to trade everything all the time. If I'm focused somewhere else, I know to stop focusing the other place and to give myself some breaks. So today I took it easy, trading stocks. We'll see what tomorrow brings. Don't forget to do good things out there. Appreciate your likes, comments, and subscriptions. And we'll see you tomorrow. Mint is a very prolific spreader. So that's mint, that is mint, that is mint, and that is mint. So I'm going to make sun tea. And I just found out that lilacs are edible. So I'm going to take a bunch of different kinds of mint, put it in a big jar, set it out in the sun for 24 hours, and then take some of these lilacs and put it in there as well. And maybe we'll get some mint lilac tea. I'll let you know. Carpenter bee making a home in my turkey. I'm very down with that. Queen Sweetie Pants got a new setup. You like it? So we got some mint lilac sun tea going. The lilac is a bit overpowering. I'll probably use less next time. But nice and easy. Stick it out, drink it.